This episode of FinTech Insider is brought to you by Fireblocks, the stablecoin infrastructure platform trusted by top global businesses such as Visa, BNP Paribas, Revolut, and more. Fireblocks powers over $100 billion in monthly stablecoin volume, helping PSPs, fintechs, remitters, and banks issue, move, and manage stablecoins, all securely and with built-in compliance. Get complete control to build your stablecoin strategy, manage liquidity, and on-off ramp in over 60 currencies, all at scale. Learn more at fireblocks.com.
Hey, it's Paris. You know I love sparkly things, right? Like stars. Duh. And thanks to Hilton and AutoCamp, I just slept under them. Picture me serving looks by the fire outside my luxurious Airstream, making s'mores with the kids, while a national park is our backdrop. The great outdoors meets Hilton hospitality. That's hot. Explore all the new ways to stay at Hilton.com. Hilton for the stay.
Welcome to FinTech Insider Insights, the podcast from 11FS, five-time winner of Consultancy of the Year at the British Bank Awards. I'm Benjamin Ensor, and today we're diving into one of the most important components of what makes FinTech successful: partnerships. We've all searched for or are searching for the perfect partner, right? It's a universal pursuit, whether in life or in business. And in the fast-paced world of FinTech, building effective partnerships is crucial. In 2025, and over the past decade, digital capabilities have unlocked a whole load of new ways for companies to collaborate, ways that were unimaginable a couple of decades ago. According to recent research from Deloitte, more than 70% of fintech product launches now involve at least one strategic partnership, and cross-company collaboration has doubled in the past 3 years. Product companies can no longer thrive alone. For product managers, partnerships are not nice to have, they're essential. From distribution and scale to speed and innovation, partnering is often the only way to get a product to market fast and to stay competitive. So in this episode, we're going to dive into fintech matchmaking. What do you look for in a perfect partner? How do you align goals, interests, cultures, timelines? And we'll explore what happens after you find a partner. How do you build trust, maintain momentum, and create lasting, successful value from a collaboration? Because finding the one is just the beginning. So to help us on this journey, we're joined by a fantastic panel of 3 guests. First up, we have Deniz Oran, Head of Payment Partnerships EMEA at Google. Welcome back to the show, Deniz. Please can you introduce yourself and tell our listeners a little bit about you and your role at Google?
Hi, Benjamin. It's great to be back. I lead the payments partnership team at Google, looking after the UK, Europe, Middle East, and Africa. And I manage our 2 main products, Google Pay and Google Wallet. Google Pay enables secure, simple payments online, and Google Wallet is the preferred way to make mobile payments on Android. And you can also save other digital credentials, such as IDs, loyalty cards, that would normally sit in the physical wallet to Google Wallet. And if we look at my team, we work with partners across the whole payments ecosystem.
Fabulous. Welcome. And we have a FinTech Insider debut for Mo Daman, Head of Card Network and Product Partnership at Adyen. Please, could you also introduce yourself, Mo, and tell our listeners a little bit about you and your role?
Absolutely. Thanks for having me. I'm Mo. I'm responsible for global card network and product partnerships at Adyen. I manage the partnership ecosystem for Adyen's core platform and products. So on the one side, we have the card networks, where we manage the foundational relationships with Visa, MasterCard. And on the other side, I'm responsible for the product partnerships. And that's really also, I think, where the conversation of today is really about, because that's where we are looking for those partners that fit to our product needs. And this is really the suite of partners that power our global product suite. So in a nutshell, it's about identifying and managing the best partners to help our customers succeed. And I'm very excited to be here today to join this conversation and to be here with experts also from key payment method partners.
I loved how you put that. It's about identifying the partners to help our customers succeed. Fantastic. And it's also a very warm welcome back to Veronica Glab, Strategic Partnerships Lead at Juice Ventures. Welcome back to the show, Veronica. Can you tell our listeners who haven't met you before a little bit about you and a little bit about what you've been up to since you were last on the podcast?
Sure, Benjamin. Thank you for having me once again. So Veronica Glab. I've been the head of partnerships at Innovate Finance, the UK FinTech Association, and a FinTech strategist for the last couple of years. But I think with your introduction, you gave it away, as actually I've just stepped into a new role as the strategic partnerships lead at Juice. So I'd love to tell you a little bit more about that. Juice is a long-term funding partner for ambitious businesses in the UK, providing a fresh alternative by combining growth capital and insights. So that's being smart growth capital. We partner across the fintech and financial services ecosystem to support the ambitious SMEs in the UK. So I think it's a perfect moment for me to be back on the show and share a little bit of that experience, but also to learn from the rest of the panelists.
Fantastic. Well, congratulations and welcome back. Okay, so we've now got a panel of matchmakers and we need your advice on how to partner. So let's set the scene. Our listeners have just signed up for fintech or banking version of a dating app. Doesn't exist yet, so bear with us. So you're scrolling through profile after profile, each one offering all sorts of fantastic promises of profitability and market expansion and so on. And all these potential partners look potentially perfect. But how do you separate the green flags from the red ones? How do you look past the sort of glossy profiles and slick branding to understand which partnerships are truly going to be a right fit for your business? So maybe I could start by asking all three of you, what do you think makes a good partner and a good partnership in sort of fintech ecosystems today? What do you look for? Maybe Deniz, perhaps we could start with you. What sort of things make another company a good partner?
Yeah, that would indeed be very convenient, actually, if we had all the potential partners, in one place and we could just pick. But in our case, there is a step before that where we start with actually the user's needs. So it depends on what problem we're trying to solve for the users, for the merchants, or the other ecosystem players. And then based on that, we determine the partners who might be relevant for our products. And it's really difficult to generalize this, but depending what our goal is, what we want to accomplish with our products and the problems we're trying to solve, there might be just a single company that we must partner with, or there might be hundreds of companies, which require a much more scaled selection and communication approach. So once we pass that stage and we know who we should partner with, and in the case there are multiple partners we prioritize, then we would actually take a more systematic approach. So we would review that company's relationship with Google, their current engagements they have. Perhaps they work with us as Google and in the way we support the e-commerce ecosystem on payments acceptance, or they are working with another part of Google, such as Android or Cloud or Chrome. So by looking at the relationship and the partnership in a holistic way, we can build the most mutually beneficial relationship. And this will influence our prioritization and how we view that partnership.
Mo, what do you think? I think Deniz makes a really important point there that obviously sometimes you don't have a choice. You need access to, payment systems in Brazil or Turkey, and there's basically only one firm you can partner with. But other times maybe it's, some kind of anti-money laundering thing where, there's a number of people you could potentially work with and so on. But what do you start thinking about at Adyen when you're trying to build partnerships?
Well, when we look for a partner, actually that search never starts externally. It always starts internally. So looking internally, what Deniz alluded to as well. What are our customer needs? Because that's where you identify what you're actually looking for. And it needs to be very crystal clear, like what your intention is, of course, because otherwise you just go out to the marketplace and see, okay, oh, nice partner. Why are we going to partner? So it starts with that why. And well, for us, a big green flag, I would say, when we have come to that decision, okay, this is the problem that we're trying to solve. Let's search for a partner. It always helps if a partner is, of course, aligned with our strategy as well. If they are as customer focused as we are, a big red flag could be when they are differentiating from our core product or from our core strategy. So it's it's a spectrum, so to say, when you're looking for partners.
What's your take, Veronica? Are there some red flags or some green flags that spring to mind for you?
I think as far as green flags, both Mo and Deniz summed it up really well. And, looking at a proven track record of successful partnerships as a really good green flag. I just want to mention that for early stage fintech companies that might be only beginning their strategic partnerships journey, you might recognize you've not got a big track record yourself. You're just dipping your toes into thinking about what kind of strategic partnerships are going to work for you. Sort of one piece of advice would be to really engage with the industry and with the community as well as you're on that journey, researching what your strategy is going to look like. Because fintech in the UK, it's a big community, but because there's a tightly organized ecosystem, it's a big community that feels small, and reputations matter. So you're going to think about the reputation of some of your prospective partners, but also how you can build your own reputation as a good member of your own community when you're just starting out as well. So strongly advise engaging with the community before you even start building the strategy. And I think conversely, one of the big red flags as well is if we're going to go with the dating metaphor as well, look out for the love bombers, look out for a prospective partner who maybe has a track record of over-promising or making very grand promises. The big green flag would be that together, when you're in the partnership conversation, defining the terms of the partnership, that you're actually thinking about what you can both contribute to the relationship, make it a symbiotic relationship, set out a framework, and then consistent communication throughout in order to deliver on those partnership KPIs. So I think that's the two big ones for me.
Deniz, presumably partnerships very much sort of evolve over time. I mean, a little bit like human relationships, potentially you start collaborating a little bit with the company on something, and then gradually, as you build up more trust between the organizations and you uncover sort of more shared opportunities, shared capabilities. Is that right? Do you sort of see that happening, that there are some partnerships that become more and more important and others that maybe were opportunistic and then sort of fade away or end?
In our case, I absolutely believe the foundation of trust is really important. Once you start the relationship and you are able to have open communication and you're able to collaborate and then build that trust, that definitely helps take the relationship forward. There can be ebbs and flows in all partnerships. We need to be realistic here. At the same time, in my experience, what I have seen is if you started on a good way, had the open, dialogue, clear goals, and build trust based on that partnership will go forward, and you can build a deeper and deeper relationship between the companies. Maybe we can give an example of the partnership we have with Adyen, because Mo and I actually have met previously in the partnership context, in our roles, and the partnership between Adyen and Google is around the Google Pay Online API. That's a online payments product I was talking about, and that's offered to Adyen's many e-commerce merchants, and that's, I would say, is a mature partnership now, but started a few years ago. And since then, we have built on it. And as we think about new product features and innovation, Adyen is one of the companies we would often speak with.
So how do you How do you go about the sort of assessment? So let's go back, and I don't want to focus on the Google Adyen partnership at the expense of other partnerships, or indeed cause you to sort of reveal any secrets. But Mo, let's take a sort of step back. When you're thinking about partners and you're doing that assessment, you've identified you have this customer need, and maybe it's a customer need that you can't easily serve internally. So it makes sense to go and find, hey, someone else has probably built this capability already. And let's imagine there is a choice of there's a number of people who can come in. How do you go about doing that sort of assessment and really thinking about, okay, there's 5 or 6 firms we could partner with here. How do you decide? Well, these guys are in Amsterdam, so they're easy to partner with. How do you sort of filter it down? How do you decide who you might want to work with?
Yeah. Well, alignment is, I think, critical. It goes much deeper than simply liking a brand. So when we are setting for partners, so to say, there's a very structured due diligence process. We identify, does it serve our needs? And we measure technical fit, scalability, but also alignment on our values. And these things, they require a constant alignment, and that is, of course, also internally with product teams. Is this indeed the right fit? Will this help our products scale? Will this commercially scale? These are all things that we would evaluate, so to say. Yeah.
Veronica, you were talking earlier about sort of startups and so on, and you often see this sort of mismatch where you've got big national banks or international banks looking to partner with tiny little fintechs, and the tiny little fintechs are 10 people or something, and the compliance and vendor assessment teams in the big banks are hundreds of people. How do you manage how do you see people managing partnerships where you've got the sort of difference in scale? Because this can be really tough for a little fintech to navigate a huge firm. And can you even get an equal partnership between firms of very different sizes? What do you think?
Yeah, certainly you can. You just have to be really aware of the timelines. I think especially when, if we're looking at an early stage fintech company but together with a legacy, financial services institution, then there's going to be a lot of natural elements where you can have a symbiotic relationship, where you're going to have very different technical capabilities and very different compliance and regulatory overhead and approvals that need to happen therein. So, my number one approach is to actually really look at the timeline of the conversation and start the conversation early. If we know that 1 year from now or even 2 years from now, we want to be partnered with XYZ Bank, we want to start those conversations early to see what are their current frustrations, their current pain points in serving our shared community or our shared audience, and actually where do they see that timeline going. And we're going to compare that against what some of other legacy banks are doing as well, if they're sharing some of those frustrations, because then as a more agile, younger company with possibly a more agile tech stack as well, we can also pivot and start to anticipate where the industry and where the market is going. So if you start the conversation early, it could look like, hey, we're just beginning this journey here with our product. We're looking for how to develop it. We want this product to really solve major problems for our partners. What's your roadmap look like? Let's keep the conversation going.
Where have people seen partnerships not working or not even at the beginning? I mean, we talked a little bit about some of the red flags. Are there times when partnerships look like they're not going to work? Times when maybe at your firms you've sort of said, actually this isn't going to be right. This isn't the answer. Have you seen elsewhere in the industry maybe things like culture clash or legal barriers, or in payments, right, competitive challenges? Because in payments it's very easy for a company that is a potentially really attractive partner to also be a competitor in some other corner of your business. Have you seen those kind of obstacles coming up and sort of preventing partnerships from working? I know it's quite a tricky question, and I'm not looking for specific examples, but Mo, maybe I can point this at you. What sorts of things have you seen that have maybe stopped partnerships from happening, or maybe caused partnerships not to work out and as well as people hoped?
Yeah. This goes back a little bit to finding that strategic fit with a partner. So when a partner, for example, offers something that is completely off, that doesn't fit with our product differentiation, then there might be a clash. An example that I had from my own experience, we had a partner that was pushing a certain product, an existing partner, pushing a certain product for us to resell. But everybody knows IGN builds a single platform. We own the technology stack. So then we noticed, okay, there's a clash. This is not going to work. So that specific initiative, of course, didn't go through because that model wasn't a product strategy fit for us. So that happens. Sometimes you identify that, and that's also a part of the process. It's a part of the partnership life cycle that also sometimes these partnerships end up not succeeding because you have identified that you're not the right partner for each other.
Deniz, you must have to think about this carefully at Google, because Google's obviously such a fabulous brand. You've got so many, users all around the world and so on, that I'm sure you're sort of inundated. Everybody wants to partner with Google. So you must have to think quite carefully about, when does it make sense for Google, and also how you manage that sort of power dynamic. Because it's very different partnering with a big company or relatively big company like Adyen. But there's probably lots of little startups that like to partner with Google too. How do you sort of think about that and decide sort of how to manage that that sort of power dynamic almost between Google with its size and some partners who are potentially crucial to you but much, much smaller?
Yeah, I think it depends on the problem at hand and what are the goals of the partnership. I think the size maybe is less important in that sense. And once we have a common goal and we can have a clear understanding with the partnership, in my experience, where I've seen has been a difference, or the partnerships that perform better are with companies who are really willing to test and learn with us, who are not shy to be on a journey. And the reason I say that is a lot of the partnership we do are related to a product feature or a product launch. So the partners need to be willing to also really test here and be early adopters. So the partnerships that succeed are with these types of companies.
So you're really sort of talking about cultural alignment, aren't you? And sort of having that common shared focus on your customer and the objectives, and then testing and learning to iterate towards that. Okay, fantastic. All right, let's take a very quick pause and we will be back very shortly.
This episode is brought to you by Indeed. When your computer breaks, you don't wait for it to magically start working again. You fix the problem. So why wait to hire the people your company desperately needs? Use Indeed's sponsored jobs to hire top talent fast. And even better, you only pay for results. There's no need to wait. Speed up your hiring with a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Welcome back to FinTech Insider Insights. In the first half of the show, we kicked off our fintech matchmaking journey, diving into what to look for when scouting for the ideal partner. Now, in the second half, we're going to shift gears to focus on the road ahead. What does it really take to build a perfect partnership? And how do you make it work sustainably for both sides? And I'll also be asking our panel of partnership pros to dust off their fintech crypto crystal balls and share some bold predictions for the future of the partnership landscape. Okay, so let's imagine the partnership's been secured, the media release is out, and it's time to embark on the next stages of the journey. What are the most important things to make a partnership work beyond a media release? The media release is nice, but what does it actually take to make a partnership successful? Veronica, perhaps I can start with you. What do you think are the sort of maybe we can have one each from each of you, but what are the three things that you need to avoid sort of partnership theatre, where it's just a media release, to actually genuinely create value for the end customers and the firms involved in the partnership?
Yeah, so actually, I would argue that a lot of this has to be done before that partnership is signed and announced. And, sort of my two of what really, really has to be done first before you sign that partnership is make sure that you're aligned on the vision and goals for that relationship, ideally pivoting that partnership relationship towards a renewal and working back from what a successful renewal looks like. But of course, accepting that, things can work out very, very differently as well. And then also aligning on your technical capacity and the regulatory and governance overhead as well. Now, once you've signed that partnership, you've made the announcement, you're very excited about it as well, is when you have to start executing on it. So this is where I would also advise to start with a pilot program or a basic proof of concept, and then slowly work your way throughout execution, keeping very good timelines on what your sort of monthly or quarterly KPIs are going to be for that. Take real-time data to turn that POC into an actual minimum viable product, and then keep testing, executing in real time. So then you really see the scalability.
Mo, what do you think?
Really like what Veronica said about starts with indeed defining the goals. How we internally look at that at Adyen. We define success beforehand. That's where it starts, because then you always know what you're working towards. And if you don't get that right, then often you also see a partnership not deteriorating if you haven't defined success. So it's important to have very clear KPIs beforehand. And then in order to drive that success, drive towards that outcome, you have continuous engagements. You really try to actively manage that partnership to make sure, are we aligned on our goals? And that is a continuous process because fintech world, it goes very fast. Things change, things move. So it's very important to keep that alignment checks on, are we still aligned on what success looks like?
Can you give us an example just quickly of a sort of KPI or an outcome? Is that generally a shared outcome, or is that an outcome just for sort of your business? Can you give us an example of what kind of KPI you might use?
Yeah, of course. It really depends on where on the spectrum of partnership you are. Because if you are on, let's say, a partner where we are a full stack build ourselves, or you are a partner on the other end of the spectrum where it's simply an Adyen product layer, and we use a service of a partner beneath. Take, for example, identity verification. Yeah, that's an easy check. We have not built that fully in-house. We use a partner for that. And they are the differentiator, so to say, in that area. And we are that within payments. And that's our core. And this is really a strategic spectrum, I would say, of partnerships. So going back to what is such an example of a KPI, it will differ, of course, per partner. So for that identity verification partner, the success rate of throughput for a more tech stack when we're looking at payments, it might be much broader. Are we getting more opportunities out of this partnership than just the services. So the KPIs will vary widely. Yeah.
And Deniz, what are your thank you. Deniz, what are your thoughts on the most important things to making partnerships work?
It's great that I'm fully aligned with Veronica and Mo, because I also would prioritize clear goals and definition of success as the number one point. And that really takes both sides knowing what they want to get out of the partnership. It could be different objectives for the two companies or the same, but just everyone knowing what they want to get out of this first. And then as a second point, I would put this trust element there. Both sides know each other, they understand each other, and there's open communication. You've built the trust up to the announcement, and then afterwards, then you can rely on it. Because as we were saying, in every partnership, there might be ebbs and flows, and you rely on that to continue to deliver together. And then the third point for me is actually around the timelines and dependencies. I have seen that when there hasn't been clear alignment and discussions around timelines, this could create some unnecessary friction post an announcement. So once everyone is clear about each other's dependencies and resources and what can be achieved, then you're less likely to have these mismatch of expectations.
So how do you do that? Because it's sort of easy to say, and it doesn't sound obvious, but you can sort of understand, yes, okay, we need to align on timelines. But how do you go about doing that practically? Is it something like having a shared roadmap? How do you communicate, and how do you sort of establish between, two different companies, what the priorities are, what the timelines are, and so on? Can you maybe Deniz, since you've raised the point, is there a way that you have of sort of managing that and trying to align expectations between two or more companies?
Depending on the partnership, there might be a formal contract that's being signed. And that absolutely is a place. And one of the, as Veronica said, that's not the only thing, right? It's one of the steps that's really important, where you will think through a lot of these questions, and you'll actually document like the terms of the relationship, which should also include the timelines and the expectations. But beyond what's actually written in the contract, what we focus on is building relationships across the organization. So the teams who are doing the doing will be working with each other. And also we focus on senior executive alignment. I think getting these senior leaders talking to each other and also making sure that they're agreeing on the high level goals of the partnership and what's been also put in the contract, and how they see the vision of the relationship later helps a lot in the achieving of the goals and the long-term success.
Really helpful. So let's imagine something, goes wrong, right? Stuff always goes wrong, right? Something doesn't quite happen on time. There's, something's unhappy, there's a bad outcome for an end customer somewhere along the line. What does that, how does a good partnership manage that? I mean, it must be easy to sort of go into blamestorming and like, oh, it's the other company's fault, sort of thing. Maybe Mo, maybe Veronica. I mean, how do companies manage issues when they inevitably arise in a partnership? What's a healthy sort of issue resolution process look like? I'm not sure which one of you would like to have a stab at that.
I'm happy to take that. Conflict is something that's inevitable, as you mentioned. But how you handle it, I think that's what makes the difference. So this is where active management of partnership comes into play. Sometimes it requires indeed more cross-functional alignment to set things right. But I think what's most important is having a healthy feedback loop is and that is structural and constant. That is generally a thing how to drive partnerships successfully forward. Because that feedback loop, whether it is positive or negative, that ensures that you are working towards those outcomes. So, yeah, ground the conversations into what are our shared goals, and avoid indeed trying to make it an opinionated conflict. But go back to these are our joint goals. How do we get there? And that usually, if we approach it as a problem or a conflict jointly and look for a resolution as well, that generally works.
Thank you. Any other thoughts on that, Veronica?
Yeah, I mean, I'll just echo what Mo said, which is, when your conflicts are inevitable, miscommunications are inevitable, for a number of different reasons, whether that's human error or bad timing, and we've all been there. And I think if we accept that that's the reality, then you just have to ask yourself one question is, when you do come into that conflict is, do I want to be right? Or do I want to have a relationship with this partner? And that's when you start to see, you come back to the common good and, and your duty of care to the customer, because that has to be number one at the end of the day.
Thank you. So over time, I suppose partnerships evolve and change just as the businesses involved in them evolve and change. Is there a sort of ever a deliberate moment where something goes from a sort of tactical, slightly opportunistic partnership where, hey, you needed a capability and there was a firm that had it and, hey, you quite like working with them, and it becomes something a little bit more strategic? I don't know. I'm thinking about something like, you look at the way Stripe and Shopify work together, and it probably helped grow both of their businesses over time, but they probably didn't initially set out to do it like that. In the same way, I'm sure, Adyen and Google, there are some partnerships that have, helped your businesses grow and helped your partners grow. Is there a point at which a partnership sort of goes from being tactical to strategic? Is that a deliberate thing that happens, or is it just something that just sort of evolves and you get to a point where you say, wow, actually, this is really important to us. This is really working. We're loving working with this company. Deniz, is there a sort of, do you have a sort of differentiation between certain types of partner? Is it something that just sort of evolves, that happens, that just gradually over time partnerships become more important? Or is there a sort of any kind of deliberate approach to it?
The partnerships that are in my team tend to be the strategic kind. I think when we are working at Google scale, we look for strategic partnerships. It's a massive investment to build a relationship, enter into most of the relationships that we work on, we see them as strategic relationships from the beginning. So it's difficult for me to make that delineation. I think the only thing I could really say is what in the longer term, as partners, as we have the innovation agenda and the testing and learning, and as partners want to do more and want to be on more of the product journey with us, we tend to then naturally do more with them.
Do you have the same perspective, Mo, or
I would say that, well, I view all partnerships as strategic partnerships, but there's definitely a nuance to, let's say, the length of a partnership. Not every partnership needs to be perpetual. Well, of course, Visa, MasterCard, obviously, they are indefinite partners. They're at the core. They're at the core of our payments platform. Sure. But there might also be partners where you're focusing more on serving a specific need or solving a customer need. Or it's more of a hybrid model. We have the intention to build, but we want to go fast. Why not explore if a partnership can help get to that goal while we build in parallel? Because that hybrid model can also be very valuable. If you can A/B test against your own solution, see if you can get ahead. So yeah, I think when I view it, I would say that the tactical partnerships are often more on the delegate side of the spectrum, and less so on the full build. But yeah, and the strategic ones are definitely wrapped around also the core products, and yeah, we continuously evolve these.
Thank you. Veronica, I'm just thinking about some of the partnerships particularly in the States, and sort of things like banking as a service that haven't worked out so well, where, it looks like firms haven't, maybe done some of the due diligence they ought to have done. And there's, some embarrassing partnerships, and there've been, few sort of outright catastrophes. So those have been obviously partnerships that have not ended well. But are there ways that partnerships can maybe come to an end in a sort of natural way, where two companies just sort of say, hey, we don't want to work together anymore? Or is it always a little bit like as a human relationship coming to an end, where there's always a little bit of unhappiness in a divorce and a little bit of finger pointing and so on? I mean, can partnerships between companies end happily, or do you think they always are going to come to a little bit of a sticky end?
Yeah, I mean, I don't know. I think it's a little bit pessimistic to expect a sticky end, especially when you're talking about partnerships between startups, which are fundamentally going to be organizations that are agile and that are, very rapidly evolving, scaling, and reassessing their business model or their hypothesis. So if you already assume that there will be a lot of partnerships that will end, maybe because you both grow in different directions, same way as you would in a human relationship. If you assume that, a relationship may end, then you start to see the nuance actually of how you can communicate effectively with each other so that it is successful for its duration. You're taking the feedback loop and real-time data, because you want to know that your partner is growing in a certain direction. But if you see that those incompatibilities start to arise, you can also approach that conversation over time with a really successful offboarding as well. And I think one thing that we also emphasize at Juice Ventures is the value of a partner, not just as a channel or a distribution partner or as a strategic partner, but we really look at what they can bring into the ecosystem as well. So you might have a partnership that does end, but you do know that it's a fantastic company, that they're very good at what they do, that they still serve a same or similar audience perhaps in a very different way because of how their business model has evolved. But you know that they do really good quality work. And when you have a successful offboarding as well, you'll both be able to contribute to each other's communities, even if it's not through a formal partnership agreement.
Fantastic. I love the optimistic note. You're right. I was being too pessimistic. Okay. So final question to the three of you. So if we think about, the rapid evolution of tech, we think about the sort of impact of AI and other things on to sort of digital business and the way that fintech is evolving. Over the next 5 years, do you think partnerships become just steadily more important? Do you think we get better at it? Or do partnerships go away? I mean, do you think partnerships will change over the next 5 years? Do you think they'll become more important, less important, or just more of the same? Is this an area of fintech that actually AI isn't really going to change because it's actually about relationship and machines can't help? I know it's a big question, but Deniz, do you think partnerships will change? Do you think your role, at Google will? I mean, I'm sure you'll be more and more successful, but do you think the need for your role will change or evolve, or do you think actually this continues to be a challenge for the next 5 years?
I think the role will continue because companies need to work with each other, and whether it's with AI or with the innovations and all the changes, I do see this persisting. And exactly this shape and form and what part of our role can be done by AI versus by humans, I think it's difficult to predict at this point. But I do expect the relationships between companies becoming more and more important. And in the recent future, because there's so much change and disruption in the ecosystem, I think it's going to become even more important for companies to be talking to each other and collaborating with each other and trying to understand how to adapt to the new reality, whether it's in payments or AI or agentic or whatever might be coming our way.
Thank you. Mo, what do you think?
I agree. the fintech partnerships was definitely not something that will go away. I think it will only increase. We will add AI partners. We will work together with agentic partners. I think in 5 years is that the lines between product and partnership will blur. So it's really a joint effort, and success, I think, will be measured in how do you define success, when to differentiate versus when to delegate. And because, I think that it's obvious that we might not build within Adyen our AI model ourselves. So sure, we will look for a partner there. But getting that right is, I think, very important. And I think matchmaking within partners, it's going to be part of the product lifecycle. It's an integral part of starting from the inside out, identifying the needs, and then search for the right partner. So, I look forward to the future. I think there's much more opportunities in this space.
Love it. And Veronica?
Yeah, I mean, look, I think a lot of AI and automation tools actually can really help to automate some of the, let's say, boring, if we will, processes, whether that means documentation. It can help automate even search or due diligence processes when researching new prospective leads as well. But look, we're all partnerships people here, so I think we'll agree. We're people. We're always going to find reasons to connect with each other and build a community with each other. But I also know that in my own case, when I actually effectively use the automation tools to help do better research or better documentation, then the places that my mind goes to is all about, who can this be useful for? Let me chat with so-and-so. It always comes to actually using my imagination for thinking about the future, for connecting with other people who are going to find that same idea really exciting.
Wonderful. Well, the three of you have been absolutely amazing. You've taught me so much just in the last 40 minutes. So thank you so much. Where can people find out a little bit more about each of you? Deniz, where can people find out a little bit more about you and your work at Google?
Easiest place is reaching out on LinkedIn.
Thank you. Mo, where can people find out more about you and your work at Adyen?
Well, I'm always based in our office in Amsterdam. But generally, if you want to reach out or interested, indeed, LinkedIn is a good platform to connect.
Fantastic. And Veronica, where can people find out more about you and about Juice Ventures?
Yeah. So Juice at getmejuice.com and myself on LinkedIn at Veronica Maria Glab.
Wonderful. And you can find me, Benjamin Ensor, on LinkedIn, or you can find out more about 11FS at 11fs.com. So thank you all for listening. If you enjoyed what you heard, please do follow our podcast and don't forget to recommend us to your friends and colleagues. If you want to join the conversation, seek us on social media. Just search for 11FS or Fintech Insider, or you can email us at podcasts@11fs.com. So thank you so much to my three guests. Thank you to all of you for listening, and goodbye.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.